Obama.
The U.S. government is shutting down. Hundreds of thousands of officials have been sent home, and anxiety is mounting in the global economy. On October 1st, 2025, a shutdown began, a partial suspension of federal agencies. Congress failed to agree on extending budget funding, and at midnight on September 30th, the government closed. The crisis has been ongoing for more than 10 days. The political deadlock between Republicans and Democrats has paralyzed Washington. This is Strifor, and today we'll examine how this crisis is affecting the dollar and cryptocurrencies. During the shutdown, the consequences have become tangible. Hundreds of thousands of federal employees have been placed on unpaid leave or are working without pay. Queues grew at airports due to security personnel shortages. Smithsonian museums and the National Zoo closed. Military personnel are preparing to miss paychecks, although the Trump administration stated it had found funds for their payments. Social payments are being delayed, from veterans' benefits to nutritional assistance programs. Economists warn economic damage could reach up to $1 billion per day. Federal employees are receiving termination notices with 60 days' notice. JP Morgan notes that the absence of data confuses the Federal Reserve's plans and may force it to postpone interest rate cuts. The Senate has rejected several funding bills, signaling an extension of the crisis. At the beginning of the shutdown, no sharp upheavals occurred. The DXY dollar index dropped only 0.4%, then partially recovered. Historical experience confirms when a shutdown is threatened, the dollar typically strengthens due to flight from risky assets. Stock exchanges initially didn't flinch. The S&P 500 index even updated its maximum. However, as the crisis dragged on, nervousness increased. House Speaker Mike Johnson stated, "I'm a very patient person, but right now I'm very angry." This is a dangerous situation. After more than a week, the dollar continues to experience pressure. The euro and pound strengthened against the dollar on a wave of uncertainty. The longer the political paralysis, the stronger the blow to confidence in the dollar. The dollar's fate during a shutdown is a game of opposing forces. On one hand, investors flee to the dollar as a safe haven asset. On the other hand, ongoing uncertainty undermines faith in American finances. For more than 10 days, fresh statistics have been absent. The government hasn't published labor market data. The risk premium for the dollar is growing. Analysts note, in the short term, the dollar may benefit from fear, but prolonged paralysis pushes it down. Macquarie analysts note, when the market begins to doubt a country's governability, it clearly doesn't benefit the currency. Political stupor is contraindicated for the dollar. Bitcoin confirmed its reputation as digital gold. Against the backdrop of the shutdown, investors rushed to it as a safe haven asset. The cryptocurrency market didn't collapse but grew. Bitcoin became the main beneficiary. During the shutdown, it soared to a new high above $125,000. The leading cryptocurrency gained more than 2.5%, and its capitalization exceeded $2.5 trillion. Why is Bitcoin rising? Investors view it as a hedge against budget deficits and rising inflation. While Washington debates debts, part of the capital is actively flowing into decentralized assets. Gold has also appreciated alongside Bitcoin. Ethereum and Solana grew in tandem with Bitcoin. The total capitalization of all cryptocurrencies rose to $4.36 trillion, with a trading volume of approximately $198 billion per day. Due to the shutdown, American regulators are operating in limited mode. Paradoxically, this creates a positive liquidity impulse in the short term. However, if the shutdown lasts a month or more, approval of new crypto ETFs will be delayed. Scenario 1, quick resolution, around 2 weeks. If Congress finds a compromise soon, the damage will be manageable. Markets will breathe a sigh of relief. Historically, after shutdowns end, the dollar and stock indices recover within a few days. Bitcoin may partially retreat from its highs, but will retain most of its gained value. Scenario 2. Prolonged crisis, more than 30 days. Economic damage will become serious. The dollar will weaken significantly. Investors will demand a high-risk premium. This means strong growth in euro to US dollar and pound to US dollar pairs. Cryptocurrencies may show extreme volatility, first continuing to rise as a haven from chaos, then experiencing sharp corrections. The average duration of US shutdowns is 8 to 10 days. The current crisis has already exceeded this mark. The longest shutdown in US history lasted 34 days. The US shutdown is testing currency markets for strength. The dollar received a contradictory impulse, initially benefiting from safe haven status, but now losing ground. Cryptocurrencies are showing strength. Bitcoin set a record above $125,000, demonstrating that investors are actively seeking alternatives to fiat currencies. The market's further trajectory depends on events in the coming days. A quick end will return the situation to normal with moderate damage. Extension beyond 30 days could shake confidence in the dollar and create extreme volatility. The global economy lives in cycles. After any crisis comes a new wave of growth. The key is to be prepared. While politicians argue, markets continue to move, and it's precisely during such periods that the best opportunities arise for those who can maintain a cool head. If you want to work on global markets with professional tools, open a trading account with Strifor. The platform offers more than 250 instruments, risk-free demo mode, and a partnership program with payouts up to 60%. Stay updated, analyze, make informed decisions, and use volatility as an opportunity, not a threat. The current crisis is a lesson about the importance of diversification and composure. Markets are going through a test, but panic is the worst advisor. The key is to monitor events in Congress and not give in to emotions. History shows, after a political storm, recovery always comes.